Ladies and gentlemen, Greg Michalowski from ForexLive.com. Today's date is November 6, 2023. This is a Forex Quick Look. I'm going to take a look at the dollar versus Swiss franc. I'm going to focus here on the 4-hour chart, and we take a look at the price action that we saw last week. The high price stalled within this swing area near the 61.8% retracement of the move down from the October high right here to the October low. That 68 came in at 0.91078, and the price moved just above that level into this swing area defined by a number of different swing lows and swing highs going back in time here. So that pushed the price out to the downside. We traded higher and lower into the U.S. jobs report, and then saw the U.S. jobs report come in a little bit weaker than expectations, and that pushed the price out sharply to the downside. In the process, we took out some key technical levels. One, the 200 bar moving average on the 4-hour chart. Two, the 200-day moving average. That's this other green line right here that comes in at 0.9002. And three, the 100 bar moving average on the 4-hour chart. That's the blue line right here near the 200-day moving average. So guess what? The combination of the 200-day moving average and the 100 bar moving average on the 4-hour chart is now going to be resistance on the top side, and also comes near the 90-ish type level, which is a nice little round number for this currency pair, which should increase the bearish bias on a test to the upside. We're currently trading at 0.8985, which is about 15 pips short of those areas, 17 pips short of those areas. But that's going to be our projected ceiling for this pair. Risk level, putting it another way, a risk level for shorts looking for more downside. As long as the price remains below those levels, the bias remains tilted more to the downside, and we have hopes for further downside momentum. Now, on the downside, I must admit that the low price in trading here today did find support ahead of a swing area. If you look at my other video, the euro versus US dollar did the same thing. The sterling versus US dollar did the same thing as well. We came down toward a target on the downside, but fell just a little bit short of that and started to rotate back to the upside. So we are seeing that dynamic develop as well. So can't necessarily rule out anything here. But what we do know is that the 90-ish type area on the top side is going to be resistance for this pair. On the downside, we need to get below the 0.8947 down to the 0.89316 level, defined by a number of different swing lows and swing highs all through here that formed this floor slash ceiling going back in time before moving to the upside through here. So that level needs to be broken, and then if we get below that level, we'd start to look toward the 100-day moving average. That's this blue line right here. It comes in at 0.88908. I'm trying to get this to circle around at 0.889098 is at the key 100-day moving average. So watching the 200-day above, watching the 90 level, looking for a break below the 0.8931/47 level is the bias for, or the levels in play for the dollar versus Swiss. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.